Let's start with first, just a general sentiment check. How are you feeling about the Bitcoin market, where we are coming into the end of the year? Has anything changed?
Nothing's changed. I think the timeline is a little bit delayed, like compared to what a lot of people thought in the fall at the beginning of Q4. A lot of people were kind of expecting to see higher prices than today, and for all time highs to be, excuse me, for all time highs to continue to be made here. But in terms of the thesis, in terms of what Bitcoin is, and where we're going with this whole thing, nothing has changed. And I think that's what we're going to dig into a little bit today.
All right, so when we start looking at some of the charts that we have here, the first that we're going to pull up is this Bitcoin store of value, medium of exchange, or unit of account. And you just have what looks like the price pulled up in terms of over the years. What exactly are you showing here?
Yeah, so this is more of just like a kind of a title slide. I saw some of the Jack discourse last night, and the next slide, it was a question that says, "Do you think that Bitcoin will replace the U.S. dollar?" There's definitely a lot of debate. Bitcoin is digital gold, or Bitcoin is going to displace a dollar, or Bitcoin to some people is a Ponzi scheme. But really, I think we're going to use some metrics today and look at some charts and kind of break down what I believe, and I think what a lot of people that are Bitcoin proponents believe, is that Bitcoin is actively becoming, or is already, all three, and the data kind of shows that.
All right, so if we start with the first chart, we've got the issuance rate and the circulating supply and market cap all overlaid on each other. What exactly is this showing?
Yeah, so this is kind of supporting the store of value argument, right? So you hear a lot of people increasingly over the last couple of years, this has been an accepted kind of proposition. Bitcoin is digital gold. It's a digital store of value. And while that was controversial for a long time, a lot of the skeptics, besides a few, have come to accept that Bitcoin is a store of value, and in the 21st century, especially after the kind of COVID madness and all of the trillions of dollars of stimulus, Bitcoin is a store of value. And so, it's the one thing we know that it has a hard cap, is absolutely scarce in the world. This issuance rate or inflation rate is programmatically trending towards zero over time. The blue line, that's actually in log scale. So in linear scale, it looks like the issuance rate is already basically at zero. And the market cap is really just a testament of people around the world allocating resources and capital to this asset class because of its monetary assurances. And so the store of value argument is stronger than ever, but I don't think it stops there. And that's when the discourse gets a little more interesting.
Got it. And so really what this is showing is, as that issuance rate goes down, or some people could think of that it almost as like an inflation rate, the circulating supply goes up, right? Because we're getting more and more Bitcoin, just at a slower pace. But the market cap has continued to grow at the exact same time as well, which ends up being kind of what you would expect if you've got a finite supply asset with a disinflationary monetary supply schedule and increasing demand. As you're going to continue to get the price to go up, even though there's a little bit of Bitcoin still coming into the market, the demand outpaces that, and that's where you get market cap growth, right?
Yeah, exactly. I mean, it's pretty simple. It's how many dollars are going to exist in 2030 or in 2100, right? No one knows. No one knows really for any other asset except Bitcoin. And this because you can run a full node on an old laptop, or you can verify the supply on your smartphone. And there's no other technology. Yes, there are other crypto assets that are somewhat transparent, but the thing is that none of the monetary policies of these other assets or digital assets are basically as tried and tested as Bitcoin. No one can change Bitcoin, and every protocol change that has occurred has been opt-in, voluntary. It's a soft fork. There's no hard forks or changes to the monetary policy of Bitcoin. Whereas other crypto protocols or assets or currencies, if you want to call them that, have done that plenty of times. So in terms of absolute scarcity, nothing in the world has or can compete with Bitcoin.
The next thing we've got is the hash rate, 70x since 2017, which is a bonkers number. Explain why you think this is so important.
Yeah, so this is kind of on the store of value side of things as well. 70x in the last 5 years, just kind of understanding what that means, what hash rate actually means. You can, for people that are more kind of visual and don't really understand what Bitcoin mining is, think of the gold miners going in with shovels and excavators and digging into the earth to find this monetary asset. Well, think about if that had increased 70-fold over the last 5 years, just the amount of expenditure and the amount of resources that are going into actually extracting, that shiny rock out of the earth. Well, Bitcoin is that, but in the digital form, and it's doing it all over the world, with sometimes nothing other than just a satellite signal and a wasted energy source, where there is no economic value, and it's basically securing and being rewarded. It's securing the most powerful computer network in the world, and they're being rewarded with the only absolutely scarce monetary asset. And so incentives are aligned. That's all Bitcoin is just economic incentives. It's completely voluntary. It's opt-in, and hash rate continues to grow at a just mind-boggling exponential pace.
When we think about the entire network hash rate in 2013, that is equivalent to one S19J Pro. Is that true?
Yeah. So the S19J Pro, it's top of the line, new ASIC. But that basically spins off 110 terahash a day. I think it costs around $15,000, maybe $20,000. It's extremely hard to get miners with all the kind of supply chains backed up, and they're back ordered from months or years. But yeah, one ASIC, one new top of line ASIC is equivalent to the entire network hash rate in 2013. And so it just kind of shows you Moore's law's in play there, with kind of semiconductors becoming more and more efficient. But that just shows you just like the absolutely insane growth, and just amount of physical capital, and resources, backing this network. There is definitely a tangible aspect to it, despite it being, thin air, or, what a lot of people like to call it.
Yeah, it's pretty incredible. When we look at the next chart, we've got Bitcoin is on pace to settle 45 trillion in 2021, totaling twice as much value as all of its previous years combined. That is an insane number.
Yeah, so this is a chart from Yassine at ARC. They put out great stuff. And this is just this is going into more of the medium of exchange aspect of it, right? So everyone gets store value. You can buy Bitcoin, you can leave it on Coinbase, or you can send it to your cold storage, and you can sit there and watch it. And it's a pretty strong bet over time that it'll increase your purchasing power, just due to the absolute scarcity of it, and due to the adoption curve, and more people coming to this asset class because of those properties, right? But most people, or less than the amount of people that understand the store value side, don't really, the medium of exchange, or maybe the settlement aspect of Bitcoin, is very underappreciated. So this network, in a completely apolitical, sovereign way, where there's no CEO, there's no board, there's no off switch, right? China just picked up, and 50% of the network was forced to shut off overnight, and Bitcoin kept on chugging, right? So $45 trillion, are on pace for that in 2021. It's a pretty insane number. And so, you're doubling Visa, I believe. And that's, pretty different when you're looking at settlement assurances. But say the best comparison is Fedwire. Well, that's, we're already 6% of the way there compared to Fedwire. And so I wouldn't bet on this trend stopping anytime soon. And, that kind of supports the more medium of exchange aspect to it. There's, final settlement all over the world, 24/7, 365.
Yeah, it's pretty incredible. Bitcoin, the cumulative network transfer volume, 22.6 trillion as of 12/21, which is today.
Yeah, so that's the first chart showed just total volume, and this one, I should have labeled it a little better, shows change adjusted transfer volume. So the Bitcoin UTXO set, when say you have one Bitcoin and you send 0.5, well, I send 0.5 to you, Pomp, and 0.5 Bitcoin goes back to me, and that's a change. That's change for the UTXO. And so technically, change adjusted volume just filters out that 0.5 Bitcoin I sent back to myself. Just that's how Bitcoin transactions work. And so over the course of its history, Bitcoin has done $22.6 trillion of change adjusted volume. And that's, obviously hockey sticking up and to the right. And so it just kind of shows you that, this protocol is continuing to grow. And in terms of medium of exchange, it's a lot bigger and does a lot more volume than people think.
Which means that Bitcoin in 2021 has done over 10 trillion, right? So, about 10 to 12 trillion of this, about half of it was done this year in 2021 compared to what it's done since its beginning of its life.
Yep, correct. It's pretty insane.
Yeah, absolutely nuts. And I don't know the exact Visa settlement number, but I do believe that Visa's annual transaction volume is now right around what Bitcoin's is. Like they're much closer than you would think, right? I think that Visa, if I remember correctly, is somewhere in the like 14 to 16 trillion number. And obviously Bitcoin being at, let's call it 12 or so, hasn't quite eclipsed it yet, but we're getting pretty damn close.
Yeah, and I think a lot of people, it should be said that, comparing Visa to Bitcoin, it's definitely a cool kind of comparison and a milestone. But just in terms of settlement assurances and final, just settlement finality, it's a lot different, right? Swiping my card at Visa, basically they have an internal ledger and they just debit someone and basically just change the ledger a little bit, but it can be changed pretty easily. There's no final settlement for sometimes weeks or months on end, and at the end of whatever period that is, the bank and Visa will transfer over billions of dollars, and kind of that's the final settlement. But when people are comparing, you say, a 10-minute Bitcoin transaction or Bitcoin blocks to Visa, it's definitely the wrong comparison. And I think that this next chart that we'll show is more apples to apples.
All right, now we've got the Lightning Network public channel capacity.
Yeah, so this is in USD, and it's in logarithmic scale. So the growth is a lot more impressive if you're looking at it in linear terms. But this is public channel Lightning Network capacity. So back in 2017, back when there was the scaling wars, Bitcoin can't scale was the narrative. The solutions were Bitcoin Cash or other altcoins. The payments narrative, despite not being dominant today, was pretty big back then. And there was a lot of questions about how could Bitcoin ever be this, as some proponents would say, world reserve currency, if it could only do 7 transactions per second, which is completely the wrong way to look at it. So here comes the Lightning Network, and with the SegWit soft fork in 2017, there was some upgrades that could allow for the Lightning Network to be built, which was just a concept conceived in 2016. So since then, you basically have this Lightning Network, which is just an application layer or software layer above the Bitcoin network, and it's completely open source. It's completely opt-in, and basically it allows for Bitcoin payments to occur somewhat instantaneously and for basically no cost or little to no cost. And so we've seen that growth is exponential, and you're seeing a lot of companies like Strike and OpenNode and companies all over the world just basically opt into this open for basic, not free, but voluntary settlement layer on top of Bitcoin. And so this allows for micropayments. This allows, I can send you 1 Satoshi Pomp. And so that's something that was never possible with Bitcoin on the base layer. And this is basically how Bitcoin will scale to billions and billions of people. And it's not appreciated nearly enough.
Completely agree. Bitcoin price drawdown from all-time high. When you see this, all of a sudden, maybe we shouldn't be complaining so much, because there were some epic drawdowns over the years. But what is this showing?
Yeah, so we covered store of value, we covered medium of exchange. What's the last one? Unit of account. So how could Bitcoin ever be a unit of account if it's this volatile? So obviously, we're looking at a logarithmic scale of Bitcoin in the background there, and the red is showing the drawdowns from all-time high. So really kind of what this is pointing at is, the volatility is the price you pay for returns. And when something is growing in exponential fashion, you will see very standard double digit, 20, 30, 40, 50% drawdowns along the way. And that's just basically more opportunity to accumulate and to, just to get your hands on this pristine, absolutely scarce asset. So currently, 31% down from all-time highs. For anyone that's been in Bitcoin for more than couple months, even, it's really nothing, and it's an opportunity to just continue to stack. So just some context, and the next few charts here will break down why Bitcoin as a unit of account is quite superior.